Welcome to the channel. The day is July 1st. We're going to talk about some trades we made last week, some repositioning, and some trades we made today. Let's get right into it. So we're going to start off as normal. We're going to look at our CNBC market watch list of stocks that we watch, that we trade puts on or we trade calls on. We're going to go over some of the things we did last week, and we're going to talk about some of the things today. Today, as you can see, actually was a good day to actually sell calls. Sell puts. Our UPS was down $1.11. We was able to sell to 133 strike, I believe. I'm comfortable with that. Starbucks, we was able to sell puts on. Nike, we didn't sell puts, but we did sell puts last week. And we're going to talk about that because it's something that we talk about a lot. Amazon, we had to reposition Amazon. We're going to go over that detail of that trade last week. And we also sold some puts to Hershey's. We also added a new stock that we're watching now to sell puts on, a company that we think is a good company. They're going through some problems with the government right now, but United Health. We think United Health is a good company. It was up really big on Thursday or Friday, and now it's giving some of that back. So we're not selling anything on that now, but that is something that we will be interested in doing here in the near future. But what we want to talk about first is we want to talk about how we had to reposition our Amazon. So our Amazon, if you can remember from last week, last Monday or Tuesday, we put out a video talking about how we sold some Amazon calls. And as you can see on this, we sold the Amazon 197 strike and we received some money. But actually, I want to say on Thursday, it reached to 198. We were a little busy. We were doing something with one of my sons. So I wasn't watching the market too much. And then when I finally did watch the market, it was at like 98.50. So we decided we didn't want to wait and go into Friday and possibly let it go up some more, even though it did go back down, went down quite a bit, went all the way down to 93. So I wouldn't have had to roll this position out or roll this position up. But I decided to do that anyway. It was something I like Amazon. I like the shares that I own, so I didn't want to lose the share. So what I did was, on June 27th, I bought to close my June 28 at 197.50 calls. I bought those back for $232.66. Then I turned right around at the same time. I sell to open Amazon August 2nd, $220, and I received $295 back. You could do the quick math. It's like $61, I believe. That part's not important. That's how much money I made on that transaction. But here's the beauty, and this is why we always be winning when we're selling calls and selling puts. So I own Amazon shares. I did one call, which represents 100 shares at 197.50. So then when I bought it back, I rolled it all the way out, even though I'm going to deal with earnings a little bit, which I don't like to. But I rolled it all the way out to 220. And if Amazon from now until August 2nd go from 197 to 220, more than likely I just go ahead and let my shares be taken, because that's a really high price for Amazon at 220. And I can let the shares go and hope I can get it back at a lower price. But by just repositioning my option, as you can tell, I went up like $2,250 if it does go to $220. That's why with option calls and selling puts, you consistently win with the moves that you make by going up, going out, by selling calls, by selling puts, then repositioning it. It's always normally a winning situation. Is why we like selling options. So let's talk about Nike, and we're going to actually go into Nike and look at the chart. We want to just look at a 5-day chart of Nike. See if they have a 5-day chart of Nike on here. So looking at the 5-day chart, we talk about never sell options, and we're selling puts against Nike. Never sell options of a day of a week of earnings. And this is why you can see on June 28th, they reported earnings. On June 27th, they reported earnings. And this is what happened to the stock. It went from 94 down to 76, all the way down to 76.69. So we were selling puts at around 90. We like Nike as a company. They reported earnings. They said that they were going to have a decrease in revenue the quarter coming up. That's always really bad for a company to report that they're going to report less earnings. So that was really made the stock take a hit. Nike is in a turnaround. They're facing a lot of competition. But as I said, we like the company. So what did we do on that Friday when it was down, almost 20%? We sold a put. We was able to sell the $70 put, knowing that it might be the selling pressure might be a little bit too much. We sold it, I want to say around 3 o'clock, where it kind of knew where it was selling in on how far it was going to be down. So it was about 75 at the time that we did it. And so we took advantage and last Friday we was able to sell all the way down to the 70 strike. That's because people buying protection, because as they watched the stock drop, they got a little bit of fear. We wasn't afraid after a big drop like that and a good company like Nike. So we were able to take advantage of that opportunity. So just to kind of recap, we went over repositioning, what we had to do in Amazon. We went over some of the puts that we sold today. We didn't sell any calls because only really call that we got left is that we could really sell on is Meta, and we didn't sell any on that. A lot of our stocks that we own ain't as high up as we would like to sell calls on, so we haven't sold any calls. And we talked about Nike, and this was real proof of why you don't sell puts or sell calls into the week of earnings, because that's when you get your most volatility. I hope this information helped. Please like, please share, and peace plies along, and good trading.